Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, where we break down the latest ASX announcements from public companies that are doing interesting things. Today's Bulls and Bears report is brought to you by Calima Energy, ASX code CE1. I'm Matt Birney and I'm joined now on 6PR by the Chairman of Calima Energy, Glenn Whiddon. Hi Glenn.
Hey Matt, how are you?
Good. Calima has been rapidly proving up its theory that the gas fields in the east of the Montney Formation in Canada are also laced with lucrative condensate. However, it's the company's recent takeover of private Canadian oil and gas producer Black Spur Oil Corporation that stunned the market. The deal will catapult Calima into the ranks of oil and gas producers practically overnight and bring with it a serious annual cash flow for Calima. Okay, Glenn, we'll get into those deal metrics in a minute, but firstly, what have you bought? What assets do Black Spur have currently?
Matt, what we bought two main assets, the Brooks and the Thorsby fields that are in production today, generating good cash flow for the company.
What are the current reserves at Thorsby and Brooks? And importantly, how much is it costing Black Spur currently to produce a barrel of oil?
Current reserves are north of 25 million barrels on a 2P basis, and the break-even is currently $26 US a barrel, and we're pleased to say that today the WTI price in the US is $66. So there's a healthy margin sitting there for us in this market.
All right, let's get into the deal. You've pretty much taken over Black Spur, private company. What are the key terms of that deal?
The key terms were, Matt, I'd like to think of it as a merger, and basically we've acquired Black Spur 100% of the company. We've issued $17 million in shares in Calima and paid out $4.9 million in cash to Black Spur shareholders. So what we've done is we've integrated the company into one, and we now consider one merged company, Calima and Black Spur.
How profitable is Black Spur? What sort of bottom line numbers are we talking about?
One of the reasons we bought Black Spur was because of its high margin business. It's protected from the downside in a low oil price at $26. So this year we're forecasting for calendar 2021 an EBITDA of around $25 million Canadian, based on an average production rate of around 3,000 barrels of oil a day and an oil price of $60.
To complete the deal, you did a pretty good capital raise recently. How much did you raise? Who tipped most of the money in, and what will it be used for?
Yes, Matt, we raised $38 million. I think the market was surprised that we were able to do so initially, but it was based on the strength of the assets that were bought and the quality of the management team. The capital was raised through a combination of high net worth and small cap institutions in Australia, and also we raised $10 million out of some large funds out of the UK, and that was the first time that they had invested into the Aussie market with an Australian listed vehicle buying Canadian assets. So we're really quite pleased with the balance of the equity book that we raised.
I see your share price jumped about 40% on the news, so the market seemed to like it. Glenn Whiddon from Calima Energy, thanks for joining me on 6PR today. And remember, Bulls and Bears is only here to give you information, not advice, which you should of course seek independently. I'm Matt Birney. Thanks for listening to Bulls and Bears.
For more public company CEO interviews, go to the Money page at 6pr.com.au and click the Public Companies tab.